Good morning and welcome to the early bird. And here we're looking at the Chinese market, or the Shanghai market actually, the comp. And as you can see here, we're at 3,000, which is a major trading level. And it's the pattern that sort of interests me in terms of lining it up with the rest of the world. We've got this particular movement up through here, which is obviously positive, but has met with resistance. And this move down through here and back up here is a retest again. It seems to be a small B wave. So there's two things that can happen here, and obviously this is going to lead in to our markets, but this little structure through here would be either up for one, back for two, up for three, back for four, and then would have wave five moving up through there, and then we'll have a larger process through the 3,000 here, which would be a positive thing. The flip side to this, and the thing that we sort of need to watch, is that this here can quite easily be up for five waves here, an A and a B and a C wave here. So this move down through here would obviously have some effect on on the sort of Asian region there. But once that's complete, that should come in around the 2,850 there, pretty much the same support level as coming through here, little sub level, and then push up through there. Anyway, that's just sort of good to know, because the consumption for our resources are coming through here, and they'll show up through here, and that brings us back to the copper market, and also our local markets as well. When we're looking at well, just before we go on to the local market, I just want to have a look at the normally we look at the S&P 500, but I just want to have a look at the S&P 1000, which has obviously got smaller caps in there. And here we can see that this market, you can see quite clearly here that this is more of a three-wave structure, an ABC, and we've got this strong impulse wave moving further up through here. The S&P 500 is still in its lower sort of areas down through here. So yeah, but essentially with all these markets, all the indices at the moment, we're looking at a five-wave structure like that, and then with just splitting hairs a little bit, but in this wave structure here, what we're looking at through here is we're looking at five waves in there, and then also within each one of these structures there will also be five waves, and that's what we're counting down. So in this one here, we're looking at little five waves as such in there. That's what we're trying to find. We're just trying to find this last little fifth. Has that top been in place there now, or are we in the third little fourth wave here? That's the splitting of the hairs there. So basically, once that's done, the normal process is to see some sort of ABC correction. The ABC correction in textbook stuff normally comes back 61.8% of the five wave structure, which is an impulse wave, 61.8% back, and it's normally a zigzag structure in terms of five waves down, three waves back, and five waves down. Once complete, then that will push to the upside there, and that's the trade that we're looking for. Now the situation is that this market, this action here, it may, depending on how strong the markets are around the global markets are, then this may only pull back 30 something percent rather than 60. So we could look at the fourth, see this five wave structure here, so we could actually even look at the wave four here as the point in rather than the 61.8%. So that's something that we'll be sort of looking at closely, and this will depend on what's happening in other markets. So that's what we're sort of looking at. So we're there, we'll be looking at this, and then we'll be looking at that. So we'd call these five waves up here for wave one, back for wave two. So when we go in and start talking about this today, this little picture here will give you some idea of like where we're sort of drilling into here. Okay, that said, here we go into this last sort of little five waves here. This is the Dow Jones on a 30-minute chart, and we've got wave one, wave two, wave three. We're looking for wave four, and this may be wave four here, but this three-wave pattern in here, this this A, this B, and this C wave in here, that very well may be the little guy just there, because we don't really expect, because we had this extension in the third wave. That means in Elliott terms as guidelines is that if the extension is in the third wave, then wave 1 and wave 5 will be about the same in terms of size, time, ratios, whatever. So that may have been it there. So it's a little bit tricky to say. If I put this on a 5-minute chart and sort of drill into this last little section here, what we do see here is we do see this 5 waves here in terms of 1, 2, 3, 4, and 5 coming up through here at the 72 or group 2 area here. And now we're starting to see this sort of structure coming down here in 5 waves, and A, B, and C here. Then the another down for 1, back for 2, and little third wave showing the personality of a third wave, but it's on the close, so we will see what sort of pans out through there. But I thought that we'll see how we go. But the 12,350 here would be the line in the sand to trigger shorts to the downside. That's already occurred because it's a bit sort of late here at the moment. But anyway, 12.3 is the top of Group 1. What I normally find here with Group 1 is that, sure, the market will come above it. I'll just say that again, sorry. This is Group 1 here, and Group 1 is from 12,000, it'll be 100, 200, and 300. And support on Group 1 here is very important because it separates the price in psychological terms from the 12,000. And when markets come up and hit a level here, they'll either they'll continue to go up, and the distance they go up will be the distance they come below. It roughly, just as a bit of a guide stick there, so the distance above will be the distance below. What I normally find, though, is that if a market comes back into Group 1 here, and it comes back under the next level down, the 12,200 in this case, the midpoint in Group 1, then it's pretty much doomed after that. It normally stops at the halfway mark between these two levels here, which would be the 12,250. That would be the normal case of events. And this is with any Group 2 in any time frame. It could be on micro levels or larger levels. So it's just good to understand all the aspects about Group 1, and that would be prices, markets going up through it, and also markets coming down through it in bearish scenarios and bullish scenarios. Because once you've pieced all the evidence, all the little pieces together, then it becomes much easier to understand. You sort of know what to do with your money and your betting and so forth. So yeah, under the 12.2 here, we've got a larger bearish scenario sort of unfolding. We are looking for a top anyway, so we need to sort of expect that. But if we get a bounce off this level, the 12.3 here, or even this one here, then we could still get the push up through there. A move above this Group 1, this number here, this one here, then would have overlapping structures again as well, and then that would be a more bearish scenario occurring there as well. So the point being here is that the top there, or are we going to see it bounce off here and have one more push up through there? That's a possibility, because when I look at the S&P 500, this is more of a corrective pattern through here. So we'll see how we go with this as well. This is 330. Here's also the top of Group 1 as well in terms of the 1300 in 10, 20, and 30 here. So we'll see how we go. But once again, we're also looking for that 5-wave structure up through here, the 3, the 4, and the 5 to here, or another push to here and get it here. And this is also the same in other markets as well. The FTSE sort of moved a bit, is a bit more down the track, I suppose, because we were looking for 5 waves up through here at the in this sort of area here anyway. So that's occurred. But at the moment with the FTSE here, as you can see, that from that high point there, yes, we've got five waves down through here in terms of the 1, the 2, the 3, the 4, and the 5. So because we've got 5 waves there, that means after the rally we'll get another 5. So those other 5 are in play now. So that move there is in 3 waves. So that's corrective. So this market can push up. And move up higher, and it is likely to move up a little bit higher because there is also 5 waves in through here as well. So we've got 5, 3, and another 5 here. That would pull back to the 61.8% of that high there to that low there, which would be the 5941 here. So that would be the sort of the area here as well. But sometimes there is relationships in an A and a B and a C, if that is the case, in terms of that length there can equal this length here. But it will depend on the supply level, because there'll be plenty of sellers in amongst all this here that will come in and sell there. So just see what occurs at the 61.8 retracement level from there to there, which is at the at the 40 there. This will also line up with the Dow. For the bigger picture here, there is a lot of support here in this area here at 5.9 through here at that previous 4th wave there. So you need to be aware of that. And the bearish picture the next bearish picture would come in if the 5.9 became the resistance through here, and then you'll use group 2 here to trigger any moves to the south here, and we'll be looking at 5 waves. Then we'll be looking at 1, 2, 3, 4, and 5 coming down through here. That will open up a larger bearish picture, and it's pretty much the same with our local market as well. This is the SPY here, but we've also been looking for 5 waves up. We've got wave 3 here, wave 4 here, and then we've been counting the 5 wave structure up through here. So as far as I can see it so far, we got wave 1 here, wave 2 here, and then we're counting the 5 waves in here. We've got the 1, got little 5 waves in there, 2, 3. I think that's 3. It could be a little bit more than that. That 3 could actually be there as well. But anyway, getting sort of close there. A push up through the 4872 there would, the distance of this sideways pattern here, which is a little bit like this one here, but just smaller. Do you know what I mean? So you see how that's, once you've got a nice pattern like that, it sort of acts as an accumulation phase here. These will take out the stops, and then the market will run up. So this is what you're looking for here. Push through here, come back, find support on here, and that's where you'll get your long position. And you use the 8 here. So the 72 and the 8 here is a trigger up to the 4.9. So that's what you want to be using through here. But just be aware that it'll be looking to take the stops out through here first. So any shorts would be the 48.50 as resistance through there, but a jab down through here and then a move back up through here and looking for support on the 72 would be the go, and getting to 49 there. But we'll see how we go. That could certainly be the high just there where that little guy is there in terms of the 1, the 2, well, that could be it there, 3, 4, 5, but 1, 2, 3, 4, 5. No, it'd have to be that one. So that could be the high there, but we'll see. Just see how we go. So it's just splitting hairs, but the 48.50 here is the main line in the sand that you need to do as resistance there. Then we'll see the bearish picture unfold from there. Support on that would see the prices higher. Okay, it's much the same with our cash market as well. Yesterday we're putting out this chart here, the 1, the 2, the 3rd wave up to here, the 4th wave here, and the 5th wave coming up through here. So it should be, that should be one, yeah, I'm not sure. I won't worry about it just yet, but we're looking for a top. That's the main thing there. In the futures market, we're looking at, that's the US dollar index. We'll come back to that in the Forex section. Copper is an important part, as you know. So, right, so what we're looking for here for our material sector to be bullish and move to the upside, we'd be looking for support on the 430 here. You can see that It's struggling a little bit at the moment, but we'll see how that goes. And the 425 here as support. Now, this market can come down to the 420 and still be pretty much right, but at the moment we've got 5 waves down. Yeah, I was supposed to check that yesterday and I didn't, so sorry about that. Oh no, that's it there. That's the A, the B, and the C there. So that's three, A, B, C, 4, 5. So that should be the low there. So that would be the A, the B, and the C. Yeah, well, you know, any move below this here, and we've got ourselves a bearish picture. What we would like to see is for a positive picture, the 430 there, because at the moment this whole structure coming down is in a corrective pattern, so it can push higher. But if it continues to come down here further, then we're getting more of a bearish impulse wave there. So anyway, the 430 and the 425 is the line in the sand for our local resource material sector to be bearish or bullish. And we are expecting a correction, so this may help pull that down. If this is the case, then it will also pull in the Australian dollar at the current highs as well. The oil market and the gold market pretty much have the same patterns as they swing through here. So we were looking at these markets as a retracement level coming back to certain levels, and this may not be over. This pattern that's gone up here is up for 5, ABC, up for 1, back for 2, and this would be 1, 2, 3, 4, 5 to there. So we could see this as an A and a B and a C wave to here, or we could, and then it would come down into a C wave through here, or we can see it as up for 1, back for 2, third wave up in 5 waves, a fourth wave across here, and then a fifth wave moving up to around this area here, the 108 here, and because the extension's in the third wave, the fifth wave will be about the same length as wave 1 here, based off here, so we should get above the 107 here. So we'll see what happens here, and this is also the same for gold as well. So our larger picture is bullish, but we need to get past this as being a bearish B wave rally here. And the same with the gold as well. You can kind of see the same sort of pattern in through here and in through here as well. So once again, I've labeled this as wave 1, wave 2, wave 3 developing up through here, and then there'll be a wave 4 to here, and then a wave 5. It'll only be a short wave 5 because the wave 1 here was only small here, or it even could be this one here, and not that it matters, whichever way you look at it, it's small. So, but the point being is that we need to see 5 waves here, and then would see a larger picture evolve from that point there. So we're either looking at support at the 430 here, that would be nice, but better still support and a corrective pattern and support across the 1440 there. And we, like I mentioned, would see a move up through here, and then an A, then a B, then a C wave here for the fourth wave, and then a little 5 waves up, moving up through there to the 1450 there, and then we'll see a larger correction through there, correcting the 5 wave structure that moved up through there. So we'd see a larger ABC correction and then a move up from that point. So oil and gold would be the same, and the thing that helps gold up, of course, would be seeing the US dollar index pushing down, and that's kind of what it's doing really in terms of this little area here. So even if you don't trade currencies, it's still good to know, keep a bit of an eye on the US dollar index. And what we've got here in terms of, well, first of all, the 76 here is the line in the sand for this market to be bullish or bearish. Now, the market for it to be bearish would really need to trigger this low point here. Right, so that's at 75, 72 there, just got it there, whatever. So that's the trigger that would really cancel that out. It does have a bearish slant at the moment, but we can't rule out the bullish count for this either. So this could certainly be as I look at it now, it would be an A and a B and a C wave to here, and then an impulse moving to the downside. But we can't rule out the point of this being up for one, back for two, then up for one and back for two here. That's why that point there is very important as a price point to keep the bullish thing in. But like I mentioned, if the 76 here really becomes the resistance, it gets locked under that, then we can sort of just another bit of evidence for a move down. But yeah, we've just got to be sort of careful there. And of course, this reflects back into the other currency markets. So if we're looking at the euro here, we'd be looking at the euro in terms of that moving up through here. This is up to the 142 at the moment here. So we would naturally see a correction across this here, being an old high, being a big sort of full number there. And would be looking at an ABC here. So we'd be looking at an A and a B and a C wave, and then back up through here. So we need to see if this market's going to stabilize at the 142 there, and that would, the opposite to that would be the US dollar index dancing around the 72 there, 76, beg your pardon. So, you know, we're not, neither of these markets are clear and out of the picture yet, but it would appear that it is showing strength to the upside, so we can go with that. But it's not confirmed, even though the charts will be labelled as that direction. But just to let you know that that's not confirmed. And also the Australian dollar here. This is the 103 here, the top of Group 1. So yeah, it's likely to come back, and like we mentioned before, we were looking also for 5 waves coming up from below the 98, and this is the last 5th wave here. It's very disorganized structure through here and very tricky to follow, but we would expect a larger correction on the top of Group 1. That's the norm, so we'll see that come down through there. If it does push up through here, then you'd want to be, well, this price has moved down since that, but in the text that I wrote this morning, if the 72 became support, well, then you would trade up using the 80 as trigger and get to 4. But under that, you always be on the right side of 72. It's just once you start doing that and being on the right side of certain prices, then you're on the right side of the market. Sure, you'll take small losses, but at least you'll get on the right side. And this is where the Group 2 really come in, the little trigger here at 65. If you're aware of that, then it just makes life much easier, because, you know, you wouldn't, if that came down through here, then you wouldn't, you know, you wouldn't get out of this trade unless that 65 became support. Yeah, because it's not so much the breaking through that's important, it's the retest. So if it found support on that and started to move up, then you could get out of that trade. But there's no point in getting out too early until you've got the evidence. So anyway, that's the levels. Alrighty, well, that's it. And just to sort of recap, really, we are looking in the indices, no matter what the indices are, we are looking for a top of a fifth wave, and then we're looking for a corrective process. That ABC process that we'll be looking for, if we're looking for that on our local market here, on the XJO here, which has had a fantastic run to the upside. As mentioned, what we'd be looking for is this 5-wave structure to be up here, and now what we're looking for is this 3-wave correction here. It's been a little while looking for it, but I feel that it's safer to trade less up in the top area here, and pretty much even trade less through all of this as well. Wait for this to come into play, and then this is where we're going to be looking at getting into the market more so within this whole section through here. That's why I haven't put out a lot of trades. Yes, I have been a bit slack, and I could have done better there, but I've just been doing other things with the website behind the scenes. So It's hard to be multitasking, but this is the main point here. So we're not, we don't really want to buy into long positions through here that much when we know that the market's going to turn. So we need to be in here. So that's the general sort of picture of things, and that's how we'll play it out. And we've been aware of that since coming into this fifth wave here. So it just depends on the time frame that you're trading. So yeah, but any help with any trades, just use the trade check, and happy to help. Alrighty, well, good morning.